Hello students, my name is Brenda and welcome to today we are going to learn of the principles of taxation, and we are going to start with a topic here called VAT or value added tax. VAT, which is the value added tax. What is VAT? VAT is tax charged on goods which are taxable. So VAT is the value added tax, and it is charged to an end user. So VAT is classified into different types, and the classification, we have the zero rated goods and services. We also have exempt supplies and the taxable goods stroke services. We have the zero rated goods. They are zero, like the business does not, or the government does not get any VAT or any tax on them. And the exempt supplies, these are the goods and services which are exempted, which are not taxed at all. And the taxable goods and services, these are the ones which we get the VAT from them. So who is a registered person or registration for VAT? Registration for VAT gives chance to any person in business who is supplying taxable goods and services with a value of 5 million or less in a period of 12 months. So this is a person who is supposed to register for VAT. This registration for value added tax. So this is a person who is supposed to be registered in the VAT books. Now, what about the registration? The registration means removing VAT registered trader from the VAT registers. And the person can be removed because maybe he wants to close the business, or the sales or transfer, there is a transfer of the business, or the death of a business trader. We have also insolvency. The registered person may decide to just put away the business. So this happens and he gets to be deregistered. We also have bankruptcy. The business registered person may be bankrupt. Maybe he doesn't have the future for the business, so he makes sure he goes for the deregistration of the VAT. Now we have the VAT account, whereby it is used to prepare the value added tax, which is the input, and the value added tax on the output side. Now we will have our formulas. We have VAT inclusive accounts and VAT exclusive accounts. Now we have exclusive. When you hear a term exclusive VAT, this means the taxable supplies or the services, they are the VAT is not put in the sale of that commodity. Now this means in Kenya we use VAT of 16%. This means we will calculate the cost of that good by 16%. When you hear about inclusive VAT, this means VAT is included in the cost of sales. Now it will be the cost of sale. Let's say cost of sale is 100%, and the VAT in our case here is 16%. Now we will have the total cost of sale and the VAT, which is 116%. Now When you hear inclusive of VAT, this means it is 116%. That means you're going to take the 16 over 116. Now this will be our VAT inclusive. We have 16% of VAT inclusive. Now we want to know about the VAT account. Now the VAT account has two parts, and we have the input and the output tax. Let's write the formula. The VAT account. Now we have our formula just here. We have the input tax and the output tax. Have the shillings just here. So in our computation of VAT, we are going to use this formula, and here we have overpayment brought down, overpayment brought down. We will include it here, just here. Then we have the VAT on purchases, value added tax on purchases. On purchases, every purchases we make, we are going to put it in the input side of the VAT account. We are also going to have the VAT on purchases, purchase returns. VAT on purchase returns. We are going to include it in the input tax. We also have the VAT on debit note received. VAT on debit note received. Debit note received. We'll include it here. We also have the VAT on payment of expenses. Any expenses in the business, they are going to be put in the input tax of the VAT. So VAT on expenses of the business. Going to include them there. We are also going to have VAT on imported goods. VAT on imported goods. We also have VAT on bad debts, the pay of bad debts, and the inventory claim. Bad debts, VAT on bad debts. Here, inventory claim, or the inventory carried down claim on this side. So on this side, on the input side of the tax, we are going to have the tax payable. That means the input tax is more the output tax. That means the output tax is more than the input tax. We will get our VAT payable down here. We are also going to have the output side of the tax, and we are going to have the underpayment brought down, underpayment brought down. We will also have the VAT on sales, all sales, including the credit sales and the cash sales. So we have the VAT on sales. We are also going to have the VAT on sales returns. VAT on sales returns. We are also going to have the VAT on credit note received. VAT on credit note received. VAT on credit note received. We are also going to have the VAT on debit note issued, given to the customers. We We are also having our exports, VAT on exports, VAT on exports. And our exports, they are always zero rated. So on this side, when the input tax becomes more than the output tax, we will always have the VAT refundable. VAT refundable. So we will just put down there, then we close our accounts. Yeah, we close our accounts. So basically, this is our formula of creating a VAT account. It has the input and the output tax. So we have all the purchases, you are going to include them in the input tax, VAT, and all the sales, you are going to put them in the output tax. Now, on this tax, we also have some formulas which we should have at the back of our heads. So we have the deductible tax, finding the deductible tax. We will have the taxable sales, total taxable sales over taxable sales over total sales times input tax. So this will be our formula to find the deductible tax. We will always have all the taxable supplies and the services. So these are the ones which are registered for VAT, and they are supposed to be taxed. Total sales include the exempted sales, the export sales, the zero rated, all of them. And the input tax, we have them on this side, all the purchases and all the inventory claim of the business. We will also have the taxable tax, which is another formula. Taxable tax, we get it by having the standard sales, we add zero rated sales. Yeah, to get the taxable tax, we have the standard sales plus zero rated sales. We will also have the total sales. We'll get them by this formula, standard sales. We add zero rated sales. We also add the exempt sales. So these are the formulas that we are going to use in calculating our VAT account. Now, as a good student, you should always have the formulas at the back of your head, and also the VAT account. You should always know where the purchases should be, where the purchases returns should be, and the debit note issued, the credit note received. Now we are going to do a question from the CASNEB paper, and we will create a VAT here. Okay, we will create a VAT of the same. Let's answer the question. Now we are going to take our question from CASNEB paper. Let's use this side. Let's use this side. We have our question. So we are going to do this question in the CASNEB August 2023. August 2023. Question number 1, see. And it says, our question is, Neno Safi Limited is registered for value added tax, which is VAT purposes. During the month of April 2023, the company made the following transactions. April 1, sold goods on credit to Fanisi traders for 500,000. April 2nd, purchased goods on credit from Salama Enterprises for 250,000. April 3rd, paid for catering expenses 85,000 by cash. That also, Ufanisi Traders returned goods valued at 75,000. We also have exported goods to Mwanza Limited, a company based in Tanzania, for 375,000. We also have purchase of stationery for 105,000 from Elimu Bookshop on credit. We also have purchased goods for 1 million from Upendo Limited on credit. We also have imported goods for 1.15 million from China exclusive of import duty at the rate of 25% and value added tax at the rate of 16%. There was also, we received a debit note of 60,000 from Upendo Limited. We also paid for electricity bills amounting to 30,000 by cash. There was also paid audit fees for 75,000 by check. There was sale of goods worth 1.75 million to the Ministry of Education. We also bought spare parts for repair of delivery van for 150,000. We sold goods on credit to Ulinzi Traders for 1 million, a business not registered for VAT purposes. We made cash sales of 250,000. There was purchased shares worth 920,000 from Kenlight Limited. We also have closing stock were valued at 600,000. The above transactions are stated inclusive of VAT at the rate of 16% where applicable, unless otherwise stated. Required, prepare a value-added tax VAT account for the month of April 2023. Now, this is our question. And we are going to prepare a VAT account for the month of April 2023. Now, let's find some space. Let's find some space here. Find our space. So use this side. So also use this side to calculate the VAT. So this is our space. This is our space. We are going to calculate the VAT. Going to calculate the VAT. Now we are going to write Neno Safi Limited VAT account, uh, for the month of April 2023. We have our input tax. Then we have the output tax. Input tax and the output tax. We start with the question. We have on April 1st, he sold goods on credit to fancy traders for 500,000. We have sales. Sales is an output tax. Now we are going to write it on this side. Sales. We have our sales here, and we are told the transactions are inclusive of VAT. Now our VAT is 16%, so we'll take 16 over 116. We multiply by 500,000. 500,000. Get our shillings here. My good students, you need to prepare your calculators as you do the question. So we have the sales at 16 over 116 times 500,000. We had purchases on credit from Salama Enterprises. We made some purchases, which is 16 over 116. We multiplied by 250,000. 250,000. We get our answer. We have shillings. We also have we paid for catering expenses by cash. So we have catering services. It is an expense. Catering services. 16 over 116 times. It was 85,000. 85,000. We will find our answer. We go to the next one. We have the Ufanisi traders returned goods valued at 75,000. We purchased from them, but now we have purchase returns. We have purchases returns. Now we are going to include this here, purchase returns. We have 16 over 116. They returned goods worth no, we sold the goods to the Ufanisi traders, but now the sales were returned. So it needs to be here. Sorry for this. Purchase sales returns. We have 16 over 116. We multiplied by 75,000. 75,000. Okay, 75,000. We head on to our next one. We have exported goods to Mwanza Limited, a company based in Tanzania. So we have exports from this side. We have exports to Tanzania. All the exports are always zero rated. So we are going to take 0. We multiplied by the cost of exports, 375,000. We get our answer right there. Exports, we have exports. We have purchase of stationery. We have stationery. We purchase stationery at but 16 all over 116 times 105,000. We'll get our answer. We also have purchased goods for 1 million from Upendo. We have purchases 16 times 1 million. We have our purchases here. Then we also have imported goods. We imported goods for 1.125 million from China, exclusive of VAT. This is an import. We made an import and we got it from China, and just below here, right, we have the inclusive of import duty at the rate of 25% and VAT at the rate of 16%. So this, it was exclusive of import duty. Exclusive import duty, and which is 25%. So this means we have 1,125,000, which is our 100%. We take 125%, which is our 100%. Then we have 25%, make it 125. We have 1,125,000 multiplied by 25%, 125% divided by 100. We're going to find our answer. We're going to find our answer here. 1,125,000 multiplied by 125. We get 146,250. And it was inclusive of VAT. Now we will take our we have the imports, which is 16 over 116 multiplied by 1,406,250. 1,406,250. That is our import. Let's continue. We have our next step. Received debit note of 60,000 from Upendo. So we received a debit note from Upendo, and Upendo is our supplier. So he gave us a debit note. So debit note received, we are going to put it in this side. This side, debit note from Brenda, debit note received. We will have 16 over 116 multiplied by 60,000. There. We will also have paid electricity bills amounting to 30K by cash. Electricity bills. It has a VAT of 16 over 116 times 16 over 116 times we have 30,000 we paid by cash. 30,000. We also have paid audit fee. We have 75,000. 16 over 116 times 75,000. Get our answer. Then we have the sold goods to the Ministry of Education. So we have the sales. Here we have our sales, which is 16 over 116 multiplied by 1750,000. 1750,000. We also have bought spare parts for repair of delivery van. So spare parts, we bought spare parts. Spare parts, 16 all over 116 multiplied by 150,000. 150,000. Yeah, 150,000. We also have sales. We sold on credit. We sold on credit to Ulinzi Limited for 1 million, a business not registered for VAT purposes. Now we are not going to include the sales to people not registered for VAT. So we are not going to account for them. So we will go to the next one. We made sales of 250,000 sales. 16 over 116 times 250,000. We get our answer just there. We also have we purchased shares worth 920,000 with purchase of shares. We have 16 over 116 times. Our shares were worth 920,000. So our shares. We also have closing stock, which were valued at 600,000. Closing stock, 16 over 116 times 600,000. 600,000. Now we are going to calculate our steps. We are going to calculate our VAT. Let's do the calculations together. We have 16 over 116 from the input tax. Let's do the input tax first. We have 16 over 116. We multiply by 250,000. 250,000. We'll have 482.8. Have that one. We'll also have the second one, 16 over 116. 16 over 116. We multiply by 850. 85. We multiply by 85,000. You will get 11,724. Yeah, 724.1. The sales returns, we have 16 over 116 multiplied by 75,000. We have 10,344.8. We will have the next one, the stationery, 16 over 116 multiplied by 105,000. 14,482.8. calculate for the purchases. 16 divided by 116, we multiply by 1 million. We'll have 137,931.0. We head on to the next one. 16 divided by 116, we multiply by 140, 6 to 50. 46 to 50. We have 193, 965.5. Let's continue. 16 divided by 116, we multiply by 60,000. Divided by, it's multiplied by 60,000. 60,000 divided to 75.9. Have that. Then we have the next one times 30,000. We have 41. Have our answer 41, 37.9. 41, 37.9. We have 16 divided by 116. We multiply by 75,000. 344.8. We have 16 divided by 116 multiplied by 150,000. 150,000. 2689.7. Continue. We have the purchase of shares. 16 divided by 116 multiplied by 920,000. We have 126, 896.6. Yeah. We head on to the next close. The next closing stock. We have 16 divided by 116 multiplied by 600,000. 600,000. This is 82. 758.6. So this is our input tax. We head on to the output tax. We have the sales, which we have just right here. 16 divided by 116 multiplied by 500,000. 500,000, we get 68, 965.5. We have the exports. 0 times 375,000, we get 0. Have our 0 there. We also have 16 divided by 116. We multiply by 175. 1750,000. We get 379.3. Let's head on to the next. 16 divided by 116, we multiply by 250,000. 250,000. We have 482.8. So this is our input tax and the output tax. Let's do the calculations. We take the sum of all the VAT input and the VAT output. So let's take the sum. We have this plus 241, 379.3. We also have 68, 965.5. So our answer, our answer, let's do it again. 68, 965.5. We add 241, 379.3. We also have 34, 482.8. We will get 344, 827.6. And on this side we have, let's take the more, which is more. I think it's this one. We have 34, 482.8. We add 11,724 plus 103, 44.8. We add 14, 482.8. We also have 13, 37931.0. We have 193, 965.5. 193. 965.5. We have 82, 75.9. Also have 41, 37.9. We get 103.4.8. We add the spare parts, 689.7. We also have 126, 896.6. 126, 896.6. We have 82, 758.6. Yeah, we get 542. Let me write it here. 542, 034.4. So we take the difference. We less 344, 82, 7.6. 344, 827.6. We get 197, 206.8. So this one should balance. Down here we have 542, 034.4. Yes. So this will be our VAT refundable. This will be our VAT refundable, which is 192, 206.8. This will be our VAT refundable. Now, my good students, this will be our answer for the Principles of Taxation CASNEB, April 2023, question number 1. Now, you've seen how we get the input and the output tax from our VAT account. So my good student, thank you for your time, and make sure do more practice on the same questions on VAT, and yes, let's meet to the other lesson. Thank you.